I think we're seeing all-time highs in the S&P 500 set. And until these two things happen, I think we're going to bounce around between that 6,000, maybe 6,100 restraint and that 57, 5,800 support. We're just going to see it continue to set real idle until things become clear. And one last thing I'll add. Next month, perhaps, we're still talking about the Fed did nothing, but we are hoping that in September we see a rate cut.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network. Now, more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Dale Smothers with us now. We're talking about interest rates. We're talking about, the economy. Dale, it's great to have you back on. So what are you making of Powell's latest inaction? Is he putting off cutting rates as long as he possibly can? What do you make of it?
Yeah, I mean, he's definitely delaying it as long as he possibly can. You're exactly right. I mean, at this point in time, we probably should have already had a rate cut based off of the data. Looking at what we're looking at now with the war, with the trade deals that are still not settled. We've got July, and then we've got an August deadline that's coming up with the EU and China. This type of uncertainty is probably going to force him to hold his hand even again in July. And then we've got, I would say, a September expectation of rate cuts. I saw today, Kerry, I think it was maybe 95% chance of no action again in July is what the market's pricing them in right now. So at this point, they're just hanging tight.
Really? You think that's the way it's going to be?
I would love to see one before the end of summer. Up until the war broke out, literally, I was putting out some publications right on the 11th of June saying, I expect a rate cut, not this time, but in July. I expect a rate cut before the end of summer, and then I expect a rate cut, the second rate cut for 2025 in the fall. And to be real frank with you, I don't know that the one in summers is going to happen simply because of the timidness of what we've seen with the Fed, the war's uncertainty. The rate cuts probably aren't going to come until we have some sort of certainty around EU because they're afraid of tariffs affecting inflation. And I think it's already proof is in the pudding, if you will, that tariffs haven't made inflation impact like we expected. And quite frankly, I'm not surprised. Tariffs are a demand destroyer. We talked about this the last time we were together. The demand destroyer of tariffs cause prices to stay pretty stagnant, just like we saw in 2017.
Yeah, really. According to some number, I think maybe the Treasury Secretary mentioned it, that one of the last time Trump imposed tariffs, the Chinese and the other countries involved basically just ate 2/3 of them and passed along a third.
Sure. And I saw a statistic the other day that was talking about the already the result of the Chinese negotiations to this point is that, and I might be wrong on these numbers, so we might want to fact check this maybe in the details, but 20% tariff theoretically was going against American goods when we sent it to them. They were tariffing our goods at 20%. Now they're tariffed at 10. So we got a 10% positive swing there. And then we were tariffing their goods at only 20, and now we're tariffing at 30. And that's just during the negotiation time. We have a 20% swing to our favor. And that's just without the finalization of the actual deal. So theoretically, as long as China upholds their end of the bargain, once all of this is settled, I think you've got stocks like Apple that haven't really seen the takeoff that the other Mag 7 have, that we'll start to see a catch-up trade simply for the open business sign that will be posted in China.
Mm-hmm. So, all right. Well, so what's your thoughts? Where are we heading here?
Yeah, I've expected, at least until, again, everything with the missiles. When missiles started landing in Iran, a lot of our market expectations had to be rejostled just a tad. But I still expect a 6,100 S&P 500 restraint, and I think it will bounce between that 6,100 restraint and a 5,700 probably resistance or support rather. We've got a pretty strong support, I think, at that 5,700 points. Even if America gets involved, there is one rosy picture that America gets involved. We send a bunker buster, and we've got one plane that's theoretically exposed for a very short period of time, and we neutralize Iran's capability of ever getting back into this nuclear war. Now, if that's the case, I think that's going to be a tailwind for the market. The variable of Iran has been a variable for at least 20 years. And to be real frank with you, I think we've had this same repeat of history over the last 4 decades in the Middle East. My hope and my true conviction is that Donald Trump, at least to this point, he has handled it as well as you could expect. There's not been this knee-jerk reaction, Kerry, which we've become accustomed to. Speak first and ask for details later. That's not been the way he's handled this. He's been very firm, very strong with his words, and pointed, saying Iran will not have a nuclear weapon. And if America has to get involved and we can end that threat, then so be it. Long story short, I believe that as long as America handles this tactfully and we aren't out there pressing for a regime change, we should be able to break the cycle of history that we've seen in the Middle East, again, the last 40 years.
Well, let's hope that that's the case. And I think we're a little more involved in it than the president is indicating. And I think there's been a lot more support, aerial refueling, all these things. They sent 200 planes over to Iran, and they don't really have that extensive aerial refueling capability like the U.S. has. So I think the United States is a lot more involved in this already. So to think that we're backing out at this point, I think we're just waiting to see if the government of Iran is going to collapse or not.
You've got a good point there, and hopefully, again, a lot of this we would maybe leave in the hand of the creator. We just pray that nothing fills that vacuum like it did in, say, Libya or Afghanistan or Iraq. This type of thought, though, what you just said about America already being involved, I'm right there with you. I think we are theoretically already involved. Iran knows that as well. Israel, as good as they are, Israel could not have survived the barrage of nuclear missiles of missiles in general over Tel Aviv, had it not been for America's involvement over the last couple of decades. The Iron Dome itself is direct American involvement. And if you think through America getting directly, if you will, directly involved, I do hope that it is simply by using some of our own munition in the attack rather than boots on the ground in Iran.
Yeah. Well, I guess we're going to find out. But, the markets were a little rattled by it at first, but they seem to have kind of found stability, right?
Yeah, all is well. I mean, if I were a town crier, I would be saying it's 7 days into the war and all is well. There's no real breakage on any front that we look at. Even the jobless claims that came back seem, and clearly this is like driving the car in the rearview mirror. We've talked about it, but the jobless claims, the consumer sentiment reports that we're seeing say that most Americans are satisfied. They're keeping their jobs. Their sentiment, their thoughts around the market are positive as a whole. This is looking good. And what's also a key indicator of how America will react is, do we see a flood into security, like, for instance, T-bills or Treasury notes? This type of action hasn't really taken place. We also haven't seen oil get to $100 a barrel like we would traditionally have expected in this type of a breakout in the Middle East. So all is well.
All right. So when we have this discussion next month, where are we going to be?
I think that, honestly, when this all happened, Kerry, my initial reaction the day of, and even that weekend, last weekend, it was Father's Day weekend, and I'm thinking, hey, by Monday, this will be a non-story. Well, just like you said, we've been a little bit more involved than maybe they were leading on. And I do think that American involvement becomes a point unless unless Iran turns over and says, hey, complete surrender. And Donald Trump has made that very clear. It's either complete surrender or we're coming to get you. If America is involved or if America is not involved, I think a month from now, this is not the story that we're focused on. Let's see, a month from now, theoretically, we're hoping that European Union trade deal is behind us and that we have a very clear, decisive path forward for a trade deal being completed in China. Again, if these two things happen, I think we're seeing all-time highs in the S&P 500 set. And until these two things happen, I think we're going to bounce around between that 6,000, maybe 6,100 restraint and that 57, 5,800 support. We're just going to see it continue to set real idle until things become clear. And one last thing I'll add, next month, perhaps, we're still talking about the Fed did nothing, but we are hoping that in September we see a rate cut, and that will, again, act as a tailwind for the market.
All right. Well, from your mouth, Dale, great to have you back on the show. Just tell us where can we find you again?
Yeah, so you can navigate to our website, rdswealth.com, rdswealth.com. While you're there, subscribe to our newsletter that we send out on a weekly basis, market commentary, a little bit of weekend reading for those who are in or close to retirement, ways to live happy in retirement, spending more time with the people you care about, less time worrying about the market.
Great. Hey, and if you got any questions for Dale and myself, shoot me an email at kl@kerrylutz.com. You'll find a link to Dale's site in the show notes of this interview on financialsurvivalnetwork.com. When you go there, we just ask you sign up for a free newsletter. Dale, been a pleasure. Thanks for stopping by. We'll talk to you soon.
Always a pleasure. See you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.